morning, ARMR Insiders. Welcome to another manic Monday. That would be the song we'd be playing right now. Okay, let's talk about our portfolio structure, what we did on Friday. We're in a very good position to either take advantage of the weakness today or raise more cash by the end of the day. So let's go over our strategy. I'll share with you a couple highlighted stocks for discussion. But of course, at the end of the day, this is a virtual hedge fund. What that means is you're bringing your own tranche of capital to this virtual fund. I'm going to share information with you. You figure out your risk tolerance, your goal, and then execute your strategy. Only you can do that. At the end of the day, you have to be the smart money yourself. Okay. So let's start with a fun little story that's kind of blowing my mind right now. And that is that for when I got into this business 35 plus years ago, and for a very long time, the tools we were working with would not tell us our P&L second by second, screaming on the screen how much the net worth of the whole portfolio was up or down every second, every tick. We didn't know till the end of the day. This is the truth. This is a fact. We had a Quotron, and you could estimate what was going on in your portfolio. You knew because you could see what all your positions were and what they were percentage-wise up or down. But believe it or not, it was not tied. This is crazy. It was not tied to the other software program that would work your P&L for you. And your P&L would be revealed at the end of the day. Unless you calculated it on your own, you could always get around that. You see what I'm saying? But it wasn't staring you in the face every single tick. And it made it a lot easier to execute strategy. And that's what we have to do right now. The open means nothing. The close means everything today. Okay? Panic and shenanigans last Monday. Market opened down, sideways the rest of the day, rallied the rest of the week. Here we go again, attacking the same location. The location is somewhere around, 592, 594 on SPY. That's going to be the location. Okay? It's as simple as this. If the market today closes below the low of last Monday, the risk monitor will be red. And what we're going to do is raise more cash. If the market closes above that low, risk monitor stays yellow, and we may take advantage of that weakness carry trading today. Market's going to crater below the low this morning. Let's see what it does. If we pick off a carry trade that rips higher the rest of the day, guess what? We might hold that overnight. You know why? Because on Friday, I shared with you that ARMR Macro was going 95% cash. Now, it's true. When the risk monitor's yellow, in theory, the macro fund has 50% cash, 50% long indexes. But I said to you, I'm uncomfortable with the close today, and I want to sleep on cash. And the way that expresses itself in ARMR portfolios that I'm managing, right, is that I wanted 50% cash in every portfolio I run going into this weekend. And that's put us in a position where we can take advantage of the weakness today instead of being driven by the weakness, okay? Today, I want to share with you that this swing strategy is the canary in the coal mine. And what happened last week is giving you information that you need to use to manage risk. When that strategy gets stopped out, it tells us we're on thin ice. It's a short-term strategy, average holding period 10 days, very tight stop. When the strategy gives us a risk on, that's the time to put on risk because we're on the right side of probabilities when rewards worth the risk. So that's the time to add to a portfolio. How I use this for portfolios I manage, I don't, you could say I should just run all my money that way. That's a conversation for a different day. But we don't do that, right? But how do we use this information? When this strategy goes risk on, it has a high probability that the market will go up. So our job is to put capital to work when the probabilities are in our favor and rewards worth risk. That's what this tool is for all of us. So we have our whiteboard. We have investments we want to own. This strategy goes green. That's the time to take risk. It's not a crystal ball. Sometimes it'll stop out. In a bear market, it'll get on and 2 days later it's out and it's losing money. Totally conceivable and happens, right? But even then, what you're doing is putting risk on closest to the stop. If you get stopped out, you go back to cash. That happens. But in this scenario, in a chop market, let's pretend 2025 is a chop market, not a bear market, but a chop market. You're getting on closest to the stop. It pops for a few days. You're not chasing. It gets hammered last Monday and goes to cash. It actually booked a tiny gain, the strategy, but that's not the point of this conversation. The point of last Monday's sell-off is something's not right about the market, right? If this is a rip-roaring bull market, bang, we're going to make more money on that strategy. If it gets stopped out, we're on thin ice. You don't want to be adding new ideas. You want to be going through your portfolio saying, maybe I should sleep on some cash over the weekend. That's what the strategy is trying to tell you. That's what I was sharing with you Friday at around 3:30. Okay? The highlighted group of the day today has to be utilities to me. Okay? Utilities are in the midst of a huge base and a pullback to the 200-day moving average. Double bottom at the 200-day, rally above the 50. Now they're holding the 50. If treasuries go up and interest rates come down, I suspect dividend stocks are going to be good ballast in our portfolio going forward in the midst of all this insanity. We've been picking off other dividend stocks. My favorite utilities right now, which we have in the portfolio, are AEP, Duke, and Southern Company. I'm considering adding Dominion back. I exited after that shakeout there, but it looks like a perfect shakeout and reverse back above the key moving average. I'm probably going to add Dominion back. Everybody else, I'll see you on the live desk at 9:30. Gosh, guys, please remember at the end of the day, only you can be the smart money of your own assets. We're sharing information here. We're all doing the best we can to manage risk. You got to figure out how best to manage your own risk and execute your strategy.